Ari Sussman, Executive Chairman of Collective Mining. We are focused in Colombia, drilling high-grade gold, silver, copper, and tungsten porphyry systems in an established mining camp with excellent infrastructure.
You are indeed. Good to see you again.
You as well.
What are you doing here?
Well, I'm not quite sure. I'm not quite sure because I don't have a booth this year at PBS.
Yeah.
But I'm here, representing Colombia. I'm talking to some government officials that are here, various analysts, etc., and just getting the word out on our company.
But it's busy out there. But it's busy out. I think there's some commodities perhaps a little bit more excitable than others. Gold. We got green shoots. Talk to me about green shoots.
It's coming back. I mean, this is, I think it's been a 3 or 3.5 year dent in the market where it's been no interest. I just came from the BMO conference in Florida, and I posted on my social media feed. I wouldn't call that optimistic. I'd call it a somber mood. But there was a lot of generalists there starting to look to figure out where they should be putting money in this space. There wasn't a hot sector. There wasn't money chasing anything. I thought that was good. So, big names like the Druckenmillers had people there, and Steve Cohen had, they had representatives there looking.
That's amazing. Yeah. If you think about it, because we're used to this very small industry of ours, and we know who the usual names are. When you get guys like that coming and looking at this metal space, we always talk about like metal supercycle and EV revolutions and all wishful thinking in terms of, in some cases for some companies. But those generals are coming in with a clean sheet of paper, it feels like. What are they asking about? What do they need to know?
So they're trying to learn individual companies versus buying an ETF. So this is a learning curve for them. But they're all there because of a deep value proposition, right? We've seen the metal prices stay pretty buoyant. I mean, gold's been up quite a lot every year, and we've seen the equities collapse. And this is because, same with copper, it's been strong, right? The equities haven't been well. And this is because the Western investors have not been buying. So Eastern investors don't buy the equities, and they also don't buy the ETFs listed in the Western countries. So they've been in the doldrums, and there's a deep value proposition in that the disconnect between particularly the equities and the commodities makes no sense. So they're here looking to try and understand if there's a fundamental reason for that, why that's happening, and if there's not, maybe come in and start to build big positions.
It's kind of, why I like talking about this is because it informs management teams as to how perhaps they need to position their company, the things that are important to big names like Druckenmiller. It's important that the setup is right at the beginning, right? So, and you look at a kind of a cost environment, raising cost environment, people talk about ASIC numbers, there's a new reality there. Yes, gold is up, but maybe margin is exactly the same as it has been for a long time. So there's no real fundamental change on the economics, but the environment is a new set of rules, it seems. So how do you take all of this new data and make decisions within your company?
So you make sure you're funded. This is the key thing, because it's been very hard to raise money for just about everyone, whether you're a developer or especially if you're an explorer. If you're funded, you drive your business plan forward as if the market's going to care, because at the point when it does, you're out of the gate much faster than every other company that then has their hands out saying, finally give me money, I've been struggling to keep the lights on for 3 or 4 years. So we're pushing very hard. I mean, that is our strategy. I mean, these companies are like lit matches, right? The interest in them goes out relatively quickly. So we need to pull as much value out of the ground with the drill as fast as we can.
Right.
And that's our strategy. Others in development, you can't really go faster with development. They've really been struggling. If you're a construction phase, there's just no interest in that right now.
But I know you just raised some money, strategic investor, no names named, 18.9 million, great. So having money gives you optionality, right? But even before this deal was done, you've got to make a decision. You want to take the money off the table, when it's there. But how do you decide the amount? Because in a market like this, you want to be anti-dilutory. You want to kind of preserve cash in a way, and you also want to be highly efficient with what you do with that money. So why so much? Let's start with that.
Well, we're drilling at least 40,000 meters this year. Okay. I figure over the last 2 years when we've been drilling, we've probably lost about 15 or 20,000 meters of time, meaning that if we were in an exceedingly bull market and money was flowing and valuations were through the roof, we would have drilled a little bit faster than we've drilled. But that was the holdback that we did to ensure that we don't do dilutive financings and get ourselves into trouble. Now, I have the ability to raise money in any market, but at what price, right? And mining companies are simply about the, who is running them and how undilutive they can be when they raise money. Who has the cheapest cost of capital is the best winner in this business. So, I'm not Robert Friedland. I mean, he has the lowest cost of capital in the industry. I would like to be that, but I'm not. But, we've done a good job of managing our money and still advancing relatively quickly in an environment where no one was doing much.
Okay, and I'm going to stick with the money for a bit because I think these are important steps, right? So, strategic investor, we're talking what? Industry, it's just pure money. There's no sort of advisory board seat or any of that kind of those sorts of demands.
There's an investor rights agreement that if they get over 10% under certain ways and we agree to that, then they would have a board seat, the buyer, etc. But right now, no, it's just simply, they bought 6.8% on this partially diluted calculation that they like to do in Canada. With the warrants, the half warrant we gave them, it would be 9.9 if they exercised and nobody else exercised any instruments.
Right, and because I'm sure you've got to keep mum on this, but there's been a lot of people sort of reading into, as we like to do, read into the situation. So last time out, Zijin were in the frame. This time, people are speculating it might be another Chinese group. Can you at least tell us if it's a purely financial arrangement? Or is it someone perhaps looking to, take care of reserve numbers further down the line when this project advances?
What I can say is this: I personally, running a company, wouldn't enter an investor rights agreement with an individual investor. Okay, and I don't see the value in that. They're just equity buyers. So it's not an individual investor.
Right. But is it a financial group? Or is it in industry?
No, it's on the industry side because we're looking for a win-win relationship where, the hopeful outcome here is that the investor would ultimately buy us. I mean, this is what we're all working towards and hoping that it evolves.
This investor, or just
any investor,
generically?
any investor. I mean, this one or another one. I don't know, right? But we wanted to make sure that this investor didn't have any control, so it's an under 10% shareholder. But when we take large investors that have skills, we like to utilize their skills.
Right.
And so for us, there's a big value add. Whether it was Zijin or Newmont at Continental Gold, or I can't say who it is at this one. Maybe those, may not be. But to pull on their skill sets, because the larger companies have big departments of skills, and we're good at picking the pockets and opening the toolbox and pulling what we need out of the box.
And will that kind of consultation happen now, or are they leaving you to run and do things as you have planned?
Look, a small investment like this for a company is a way to keep an eye on and look and learn.
Pay attention, right?
Yeah, and so this is we continue to do what we need to do. There was a use of proceeds like any financing attached to it. It was really, just the investor agreed to it because it's a use of proceeds of money that they put up, but it's our same strategy. Let's go big. We're in the go big, go home model.
Yeah.
Okay. We think we're onto a camp of porphyry systems, and so we're going to try and do that. And look, our goal as a company, we want to sell this ultimately. I don't want to build this one again. And so this is to try and put an envelope around as big a system as possible. Let everyone, including the potential acquirers, dream, and then we'll worry about how do we infill and go to resource estimates, reserves, and all these various studies that'll come. But we're trying to go big here.
Okay, so 40,000 meters.
Yeah,
that's big. That is clearly a big program. What does it do for you? Because I noticed that you announced another discovery.
Two. In
right, I
January.
know two. Yeah, right. Okay, two. Sorry. Market just goes. It's a discovery, crying out loud. That's a hard thing to do.
But you're dealing in the worst sentiment I've seen in my career, and I'm going back to the early 1990s in gold. I mean, I've never seen it this bad, and I remember 1998 to 2000 like it was yesterday. Okay, you did get rewarded if you made discoveries in that point. You don't today, but that doesn't concern me. What concerned me is making sure we have money to continue, and make sure that we're at the front of the list for when the cycle turns, which may be right now. I mean, the equities this week have really started to improve, so maybe
it does ramp PDAC though, doesn't it? People get excited out there.
Well, what's funny though, there's always been a rule. You know this rule, right? Buy in December, and sell at BMO or Tepedak. This is when you get out. But this year we've had the opposite. It was you should have sold in December, or frankly sold last May, right? Stayed out of the market, and now it's starting to feel like this is the time to come back into things that are not uranium or lithium.
You're calling the bottom.
Yeah.
Good. Someone had
Well,
to.
I mean, I don't know. I mean, we don't know. It could be a false start, but there's definitely interest. And the key in my mind is the resource specialized funds who have decimated. They have no money. Let's see over the next 3-4 months if they start to get some inflows, and that's how we'll know that there's a bottom, because they can't buy positions right now. So if they're back in the market starting to build small positions in companies, that incremental buyer is going to drive valuations back to something more normal.
Yeah, and redemptions last year were like off the chart, brutal. But it just kind of also reminds you how short term most of the investment community is, because that's retail money going into funds, which they're seeing redemptions, and it's painful for everyone. This year, it feels like if we have to wait till the US elections are concluded at the end of this year, it's going to be a lot less companies to look at. You feel, that's true, right?
And I think that, I mean, we've had this problem, whether it's Australia or Canada, with listed companies for a long time. But somehow they manage to stay alive. They roll back their shares, they keep the lights on, and they come back. So, you know, there's always going to be too many companies. I don't think that number is going to consolidate. They may go broke, but they go to Chapter 11, but they don't.
Yeah.
They don't lose the company.
But I'm looking for companies I can believe in, who've got a plan, got a strategy, got the team to deliver it, and got the capital to actually execute on the strategy, right? And there's a lot less of them.
Agreed.
Right, and there's a lot less company builders, a lot less mine builders, and I kind of need some reassurance around their understanding of the new reality in which they're operating, right? And I'm looking to you guys.
So we have a very well-established group of mine builders that are in the twilight of their career and ages for this industry. They're really on their way out. There weren't too many mines built, you know, in people in my generation over the last 10 years. I mean, that bull market that went from, call it 2000 to 2011 or 12, I think it was more of a commodity price-driven bull market than an equity valuation bull market. So not a lot of mines were built. I mean, we didn't see production blow out around the world, in whether it's copper, gold, et cetera. And so there's not a lot of people that know how to build a mine. It is not easy. I mean, we built a mine, you know, we made mistakes. I mean, we should have built for about 500 million. We ended up coming in at about 550. That 50 million was oops, we screwed up and had to redesign a couple of things. So not too bad. I worry today, though, if you made that same mistake in the current inflationary environment, with that 500 had been 700, maybe, right?
Well, last year we saw a lot of that.
A lot of that, right? And so, but, you know, once you've done it once, you have the experience. This is, I mean, any business is a game of seeing the fires before they're lit, right? And being able to stop them before they get lit. And so we had a few lit. You know, hopefully if we build again, we'll be able to anticipate what's going to light and put it out before it starts. And that's hard, and that takes experience and practice, and not too many can do it right now.
So talk to me, since I've been at PDAC, I've met a bunch of ministers. I mean, fantastic, nice attendance by government representatives, department representatives in terms of resource, which I've not really seen or had access to before. It's usually sort of, you know, way down here, but the ministers are here. And the thing they're saying to me is, we're looking for businesses which aren't going to make them look bad. So there's a due process to go through. I know the list is much longer these days, but it's something you've got to get through, and it's expensive, and it's costly in terms of time, etc. But Colombia, you've operated there.
Yep.
Has much changed over the years, or is it the same delivery?
No, it hasn't. So Colombia, look, if you want to work in Colombia, that's what I know. Okay, you have 50 million people in a landmass that's a fraction the size of Canada, meaning you're going to build a mine, you're dealing with communities. In Colombia, the important thing, at least what we follow, which has been successful, is go into the community, create while you're drilling. Like, I mean, I'm talking way before construction. Start to create employment opportunities that are not related to mining. Right. So you want to expand the local economies, train people, job training in new careers, and grow. And if it grows, mining just then becomes a part of it. It comes in, it lasts 10, 20, 30 years, whatever a mine life is, but then it goes out and the economy is stronger. And that is the trick, right? So, we just announced 2 weeks ago in partnership with an entity, which is a government entity named SENA. They're a job training agency. Yeah, I mean, we're in an area with low unemployment. So we said, okay, where can we improve the employment base and train people? So we focused 100% on women, right? Because in this area, it's a little more old school. Most women stay home and look after families instead of thinking about being on careers. So we said, okay, hey, look, there's big opportunities here. And we graduated 280 women in various industries, not mining, textiles, the food industry, et cetera, beekeeping, to create honey. And so now we have 280 women that have either gotten jobs or out in the labor force looking for jobs. And we're in an area with sub 5% unemployment already, right? So this is the key to sustainability, and that's really the best word. I don't like ESG as a word. Sustainability is what makes these projects work, and environment, all these things you need to do, but there's a way to do that. It's not that complicated. Being responsible, it's improving lives. That's the hard part.
It's kind of, actually, I kind of like talking to guys like you and companies like yours, because I don't have to have a conversation about, do you know how to drill and find stuff? We've got 3 now, right?
Yeah.
Need another 9 to complete the set of Greek gods.
Yeah, I'm going to work on that.
Please work on that. But I don't have to have that conversation with you, been there, done it. Okay. What I want to sort of understand is, because of all the kind of the risk environments in terms of geographical, and I agree with you on the ESG terminology thing. There's a bunch of new things that have come along which block the ability for companies to do things in timely fashion, and time's money and all of that sort of stuff. And sometimes it's kind of infinite in a way. We've seen a couple of big mistakes last year by big companies who should know better, right? What are you sort of seeing, looking forward to, and saying, well, hang on a sec, I've not quite had that experience before, but it might be an issue, so we need to do something now. What are those things?
So look, first of all, in my view, you invest in a country for mining, okay? Before you even look at a project, the first thing you need to determine is there a legal framework by the government around mining? Meaning, what are your taxes? What are your royalties? What are the rules of operation? If the answer to that is no, I don't invest. Okay, so you won't see me invest in Ecuador. I like Ecuador. I think it's too early, because you need to negotiate on a case-by-case basis with the government of what your tax rate's going to be. And Cobre Panama, there's your prime example of this. Let's negotiate the rate, and then, oops, let's change it. So that's step 1 before you go into a country. Step 2 is boots on the ground in the communities. Understand the dynamics of the communities. There's no way to do that better than actually spend a lot of time there and get to know people. And once you understand the dynamics, you can start to learn what the needs are of a community, and then you can start to build a business plan around servicing that. And that's the key. I don't think mining's gotten worse. It just has more regulatory hoops to go through. We all harken back to the days, 1990s and before that, where, hey, we hit gold, bang, stock goes flying higher, you really do nothing about it, and that's it. Right now, once you hit, the problems come. This has been the last 25 or 30 years. I mean, you hit environmental, social, all these things, displacement. We're worried about all these things, and we've put, the industry or the world's put enormous amount of bureaucracy around how to manage these things. Simplify it, right? Not everything is about trying to meet equator principles, right? That doesn't work everywhere.
Yeah, talking about simplifying, right? And I agree with you, because it's so confusing out there in terms of the market has been absolutely abused for 3 years in terms of the equities. Gold's had a tough run of it, and the trouble is, you guys all say the same thing to a very large degree. And it's like, well, how do I identify the standouts, the most likely to succeed, most likely to win, and more importantly, drive that share price, right? So if I look at you guys, you kind of got out of the gate real good, nice chart, sitting up here, it's like a cop, and it kind of came off. But you're kind of a better company than you were back then, obviously. Done a lot more drilling, you know a lot more, we've kind of got that scale component to it. You've identified some of the things that concern you and are important for you as a business to say, look, we've got to take care of boots on the ground, we've got to take care of things in country. Shareholders, what should they be valuing? Why should they value you more?
People, people, people. I mean, this is the key. You know, I'll put our team of explorationists up against anyone in the industry. You know, and mining is a brutal business. You know this. I mean, you have, I think Pierre Lassonde estimates about a 1 in 1,000 chance of just making a discovery that becomes a mine. But like any business, doesn't matter the industry, it's like 5% of the groups tend to do it more than once, right, and have the success. And so we've got the team of very strong people, and we know how to find things. And that's what I sleep with comfort at night. We know we have a wonderful system, and we're going to continue to grow this thing. I don't say this lightly, but I believe we're on the cusp of developing what'll be a famous gold camp in 2 decades from now or something like that. And we haven't found one of those, since the 1990s, really. Right? I don't know how big it'll get, but you think Marmato sitting next door to us is 9 million ounces roughly in measured, indicated, and inferred. We don't have any resource estimates yet, but there's no secret that Apollo is going to be multi-millions of ounces. What is Trap going to evolve to? What is Olympus Deep? We're drilling 3 new targets this year, Box, X, and Tower. We really like them. I mean, I'd be shocked if we don't make another discovery again this year. So, let's keep pushing this ball forward. There's not too many projects like this in the world, and we've got a strong team driving it, and I'm the most aligned person with shareholders. That's another key thing. What do you look for? Management alignment with shareholders. I mean, even after this financing, management and insiders own approximately 40% of the stock.
Right.
We wanted this to work. I mean, this needs to work for us.
We all want to work. The industry needs it to work, and the industry needs to see a lot less companies falling over by self-inflicted missteps, right? For you guys, let's be clear about what it is that you're creating. Talk about a district. When people talk about districts, I always get like, because it's a big thing to try and achieve. Lots of companies having to change strategies. Some by doing dumb stuff, like we've not made a discovery, so we're going to be a prospect generator. Some haven't found enough gold, so we're going to be a lithium company. All of that kind of crazy stuff that we saw over the last.
That's the majority
months.
of them.
That's the majority of them, right? But when you get big, everything gets big. The capex gets big. The chance of really screwing things up gets quite big, etc. So, when you look at a kind of opportunity in front of you like this, do you see the need to kind of change the way your strategy, change that plan, so that if money is hard and expensive to get a hold of, do we need to perhaps do that kind of smaller, less efficient start to getting revenue going, or is there still there's a big kind of Canadian mentality of bigger is better?
It's a good question. So every year when we do a budget, I ask of the management team, prepare a doomsday scenario budget. It doesn't matter if we're in the top of a bull market and money's flowing. I say prepare it, because then it trains people to think about how do you scale back in that problem time. With that said, you have to know, you have a toolbox. That's what a company is. And you have to know when to add tools to that box, and that's what comes with experience and mistakes. Okay, we have the right matrix right now. I suspect by the middle of this year, our toolbox is going to have to expand. Our on-ground sustainability team is going to grow. We're going to end up growing the geology team. I'm now starting to think it's time, for example, we may need to bring an engineer into a senior capacity this year. We're at that point where we're ready to take that next step.
I like that, because here's the thing, that when I'm thinking about retail, some of the questions that get sent in, you sort of realize that not everyone's kind of got all the information that they need, or their understanding, quite frankly. So when we look at the type of results that you post quite regularly in terms of the grade, the length of the intercepts, the depths at which these are at, you've got to have a view now about how this becomes a mine, where you put the plant, where you put tailings, where you've got to have a sense of that today. Can you paint that picture for shareholders or potential shareholders and say, like, we know where we're going, but we've got a few steps to go?
So that's another good question. So that was the question that we sat down as a management team and tried to answer in the fall of 23, and realized that the only way to get to that final answer is to drill like buggery and cover this 4.5 kilometer trend, because we've done scenarios and where infrastructure will go. The problem is right now they're sitting where targets are. So this is literally, so we need to, now this is why instead of taking our treasury and going and drilling the Apollo discovery into a resource, we're trying to hit this whole trend so that we can sterilize it.
Yeah.
Right, in somewhere, and then we'll know where we can put infrastructure, because
Yeah.
we had 4 locations where infrastructure will work. So hopefully one of them we'll miss, and that will be where we move forward on, and that's when we'll bring the engineering. But that is really the truth where we're at right now.
Yeah,
and this is why we're working very hard to cover this trend with drilling.
Yeah. Isn't that
That
great?
would be a shame. I mean, it's a good
Yeah,
problem.
you don't want to be building a plant on top of like millions of ounces or
So
whatever.
what will the plant look like? I mean, these are the things. What we're quite advanced on internally is metallurgy. I mean, this is always the thing that takes the longest with these companies, and so we're quite advanced on that. I mean, we're at PEA level metallurgy on Apollo, and fortunately we have no issues. I mean,
And you mentioned earlier, and I need to get over there on the shop floor. There's some new technologies coming through. I'm never a fan of new technology, but there's a lot of test cases on this.
well, this assay technology
Yeah.
by this company Photon that's being used
Yeah.
now, this is far superior to fire assay. I think fire assay in a decade's a thing of the past. Okay, it's simpler. You get your half core back, so you don't disintegrate the half a core.
Yeah.
So you keep full core. That's much better for QA/QC and for risk. And it's cheaper. Okay, simpler, less steps. So that's a game changer. Secondly, we're close, I think, from what I saw, of eliminating cyanide over the next 10 years in gold mining. That is big. So imagine going to permit in jurisdictions say we don't need cyanide.
Yeah.
It's big. According to the group that I talked with, it's not that much more, per ton on your metallurgy. Maybe it's $1 or $2 more on your operating costs. So it's something, but it's early, and recovery rates aren't 95. They're more like 88 to 90. So you're going to lose a little bit of gold, but we know a lot of jurisdictions that if you can go in and say no cyanide, you're going to get a permit.
Yeah.
That one's fantastic. And the third thing that I learned about was technology to remove arsenic from high arsenic bearing ores. Okay, so I don't know if that works yet or not, but if that does, the bullish copper story is probably going to turn bearish over the next 2 decades, because there's a lot of ore that will never come out of the ground as it stands today.
Yeah, no, I can think of a couple right now who they're mining around, having to sort of divert to avoid the kind of arsenic.
This will be game-changing.
They'll change things.
Well,
economics
look,
for them,
we've had a game-changing technology in the industry that people don't want to face in nickel, right? Whether we agree with it from a philosophical perspective, what's going on in Indonesia or not, that's a different conversation. But you can now take nickel laterite and convert it to a class 1 nickel, which is the highest standard used for electric vehicles and the transition. So I'm struggling to understand the business model for nickel, for these non-laterite bearing sulfide sources at low grade, how they're going to move forward, because this laterite stuff's like 1.5%, 2% right at surface. You can scoop it with a bulldozer. And right now, it seems that the Chinese are being given free rein in Indonesia to strip the trees, take up the laterite, and process it. So this is game changing.
Yeah, yes. We do a weekly show on it, so we can get into it for the last 3.5 years. Yeah, we can get into it another time. But for you guys, all right, it sounds like obviously new money, new strategic plan, drill that to buggery. 40,000 meters this year. What are the kind of highlights we're looking for? Is it just drill results?
Drill results, metallurgy, and advancements in that regard. That's it. I mean, we're going to demonstrate a large system by the end of the year, and hopefully everyone will enjoy the ride.
Good man.
Good to see you.
Good to see you, fella.
Thank
And
you.
enjoy yourself out there.
You too.